So here we go. We're going to start the DSCR webinar. Just a little intro. Most of you guys know me, but here's my contact information. I'm also going to try to keep it at the bottom of your screen as well, just in case you miss it. For those of you who have not met Jared, he is my account manager now. He's awesome. He's responsive. He's knowledgeable. He's motivated. He's 10 out of 10, highly recommended by our underwriters, broker partners, and me, myself. So we are looking forward to building relationships with you guys together. And as you guys know, we don't hide our underwriters from you either. They are listed at the top of every approval, their phone number, last name, full name, email address, all that good stuff. But you've got me and Jared. You're probably not going to need them, but we don't hide them from you just in case you do need them. As you guys know, we cover every time zone. We've got an office in California. We've got an office in Charlotte. We have brokers all the way from Hawaii to the East Coast, and we have support staff everywhere in between. My favorite email address that you see here is scenarios@orionlending.com. Of course, you can always reach out to me. I'm pretty knowledgeable on guidelines and happy to help. Or you can email our scenarios desk. They will help with income calculations if you attach docs, but please be aware they ticket those emails and they do keep track of them. So if you are sending them income calculation that's going to take 2 hours for them to calculate and send back to you, we better get that loan, because they are ticketing those, they are tracking them, and they will turn off your ability to send emails like that to the scenarios desk if we're not doing business with you. So just a heads up on that, but it's an awesome resource. Definitely use it. This is what we're going to be covering: the DSCR overview, the submission requirements, broker marketing for you guys, how to qualify these, closing in individual names, investing in LLC, pricing, prepayment penalties, the assets as far as down payment and reserves. And of course, we're going to dive into property and appraisal. A few spoiler alerts. We go all the way up to 85% on DSCR, which is the most aggressive product that's out there on the market right now. We go all the way down to a 620 score. Like I mentioned, they can close in an LLC. That's optional. And we even allow first-time investors. We're going to dive into all of that. So stay tuned. So what is DSCR, or at least what does it stand for? DSCR stands for Debt Service Coverage Ratio. And to those of you who may not have done a lot of DSCR, that probably doesn't make any sense. So we will come back and explain that more in detail. You may have heard this referred to as investor cash flow. A lot of lenders are calling it that. Some lenders are calling it a non-owner, no income. My personal favorite, which I made up myself, is the Ninny New. I think it should come with a dance or something, maybe make that go viral on TikTok, but that is no employment, no income, non-owner OC. And I also made up another name as well, which is the Nunya business loan. So that stands for non-owner, no employment, yes assets, business loan. So if you guys have any ideas, by the way, for fun names, run them by me. I'll take it all the way up the flagpole. I think that's fun stuff. So let us know if you think we need a more fun name than DSCR. So what is a DSCR loan? So let's get started. What the premise of this loan is this is a mortgage that simply uses the rental cash flow, so rental income potential on the property, to qualify the borrower. That means there's no employment, there's no income on the 1003 at all. There's no tax returns, no income docs, no DTI, no DU, no LP, no AUS at all. But you have to remember, this is investor occupancies only. Why is it investor occupancies only? Because we are using the rental income on the property to qualify them. So you're not getting rental income on your owner occupied primary residence. So this is only for investor occupancies. We do these for purchase, rate and term, and cash out. Who is a good fit for DSCR? So who would be a good fit? There's so many good fits, but one of my favorite is investors who probably would not qualify on conventional traditional financing due to them writing off too much on their tax returns. Maybe they own a lot of properties, they write off everything, wouldn't work. That would be a good fit for DSCR. Also, investors with tons of properties who don't want to provide leases on all their properties and tax returns, all that, because remember, these are no income, no tax returns, no pay stubs, no W-2s, no nothing on these. Also, we do have a product for first-time investors, and we're going to take a deeper dive into that. Also, this is great for investors who need a quick close. These are faster closings because you don't have those income requirements or DTI or anything to really bog you down as far as documentation. If you submit these today, there's no reason why you can't close them this month. So these are awesome, easy loans. Our underwriters love these loans. They're asking that we get more of these in. It's a great product. What do you include in the submission? So in the submission, you can generate the disclosures in our portal, but it's very important that you do not put anything for income. Very, very important. You will have to resubmit it if you do. So they're working on putting a block in our system so that you can't include income, but no income on the 1003. You're going to check does not apply for employment. And this is very important because we're seeing some of these come in incorrectly. You do want to list out all of the addresses that they own, either in their individual name or their LLC on the 1003. So yes to listing their properties in the REO section, but do not list any rental income for those REOs and no expenses for those REOs. We do want to know what properties they own though. Of course, we do need a credit report. We'll talk about the credit requirements. We're going to need 12 months of mortgage history on all of their financed properties, on all their mortgages. This can simply be on the credit report. That's fine. So if all of those are reporting on credit, we can just see that payment history on the credit report. If for some reason it's not on credit, we're going to need a VOM on that mortgage so that we can check the last 12 months payment history. We also need 2 months asset statements. And if it's a refi, we do need the lease. So we'll talk about some alternatives here down the road, but definitely if you've got a lease, it's a refi, include that. And of course, if it's a purchase, we want a contract. Orion does TBD properties, however, not on DSCR. So we're talking about DSCR loans. We're going to need a contract on these. They need to be under contract. Very important. I'm going to say it again. Do not include income docs. Super important. So a lot of our brokers always say, I don't have time for marketing. I want to market this to my real estate agents. I can't design it. I'm not creative. All those excuses. Guess what? We did it for you. So as long as you have a login with Orion, and if you've misplaced your login or need it reset, let me know. You're just going to click on Marketing Studio up here at the top of our portal. And it's going to open up something like this. We've got marketing on all types of products, not just DSCR, but I put some examples here that we have already designed for you. So once you log in, you can filter by DSCR like I did here. And these are already designed for you. So what you're seeing on your screen is Instagram posts are already the little square, full-blown flyers down here on the bottom right where you can co-brand with your real estate agents. These are all fully customizable. So if you don't like a picture, swap it out. There's over 1 million copyright-free images in there. Don't like what it says, change it. Don't like the font, change it. But we've done the legwork for you. We also have like Instagram stories, Facebook stories. So definitely jump in there and check that out. These are the examples of some of the flyers. Everything in our marketing studio is in English or Spanish. You pick one. And like I said, you can put your information on one side, realtor or builder on the other side, and you guys can co-brand and promote yourself together. So why DSCR with Orion? Great question. Who asked that question? That was me. I asked that question. What you're going to love about Orion is, of course, the designated support team that we mentioned in the beginning. We are here for you, happy to help. Also, Orion is fully delegated for DSCR with our investors with full underwriting authority. And that is very important. A lot of lenders that you're using probably for DSCR are not fully delegated. They may even have to package the full file up and send it off to their investor prior to closing. Orion does not have to do that. And that really, really can impact your experience. So I definitely want to point that out. We're fully delegated. We don't have to send these anywhere prior to closing. Now, if you ask us for an exception, which they do, they will consider, some of our investors will consider case by case, that we would have to run by them. But as far as in most cases, we do not have to send these off to the investor. We also have really fast turn times. How do you know where our turn times are, or how to find them? So when you're in our portal, you're going to click on the rainbow turn times button. It's going to pop up our turn times, and spoiler alert, right now we're 1 day for all purchases and 2 days for refis. So very fast turn times, also very similar for conditions and closings, super fast. Another reason to use Orion is our technology is really and truly second to none. Our company spent over 6 million big ones on our technology, and it really, really shows. So our portal works for you. They say technology works for you or against you. Ours is definitely saving you time, making your work life a lot better. If you want to do a training on our portal, which is called our STAR portal with our help desk, go ahead and scan, point your camera phone at this QR code. It'll pop up where you can register. We do training calls on our portal every Tuesday and Thursday. We also are here to make sure you're supported. We have our STAR help desk that's online 11 hours a day, Monday through Friday. You can call them, email them. One of my favorites is our chat. So you can click the chat down here at the bottom right of the portal, and it will start as automated because our little chat bot, Alexa, can answer a lot of your questions. However, if you don't see your question, it will transfer you to a live agent, and they are pretty quick and ready to help on your questions. So let's get into DSCR qualification. If you've been snoozing, this is when you want to wake up, because this is the important stuff. So remember, these are debt service coverage ratio loans. So how we're qualifying them, since we're not qualifying them based on their income docs, is we are comparing the income potential on the property to our PITIA, and that is not a typo. That A stands for association dues, if there are any. So what is the gross income? So the income on the property is going to be the lesser of the market rent. And when I say market rent, I'm referring to what the appraiser puts on the rent comp schedule as the rent potential on the property. So we're taking that market rent per the appraisal or the current lease. And I like to note, we do not require a lease on a purchase unless there is a lease in place that is going to transfer to the new owner when they close on this property. So sometimes when we get an appraisal in, it may note that the lease is blah, blah amount per month, and that it doesn't expire for 10 months, for example. In that case, and that's not the norm, we don't see that a lot, but if that is the case, we would have to take the lesser of that current lease or the market rent per the appraisal, whichever's less. But usually that doesn't come up on purchases, but I do like to point that out. If it does come up, we do need to take the lesser. So you take that market rent on the appraisal, divide it by our PITIA. So that's our full mortgage payment amount, including association dues, if there are any. And let's just work through an example. So if this is a purchase, let's say that the rent comp schedule on the appraisal is $2,000 a month and our PITI is $1,600. All you're going to do is divide the 2,000 by the 1,600, and that is going to give you, in this example, 1.25. So that's what we call our DSCR. And actually it's kind of redundant to say DSCR ratio, but hey, I did it. So that's the DSCR on the mortgage. And that's what you're going to use when you're looking at our matrix. So for example, this DSCR is over 1, and it's over 1 because the rent potential on that property per the rent comp schedule and the appraisal is more than our PITI. So when that happens, which is what most investors want to see, right? They usually, the whole point is to make money on an investment property. So if you're over 1, you're going to look at, oh, by the way, quick note, we do have an interest only option. We have a 30-year or a 40-year. The 30-year will be a 10-year interest only plus 20 years fully amortizing. The 40-year will be a 10-year interest only, 30 years fully amortizing. We are going to be rolling out ARMs But if you are choosing interest only, then you actually only have to include the interest only payment when you're qualifying them for the DSCR ratio. So this is a screenshot from our matrix. You're going to have a couple of sections on our matrix. One is when you're over 1 on the DSCR, and that means that the rental income is more than our payment. Then that means you're going to look at this section. You'll see we go all the way down to a 620. At 75%, if they have a 640, we'll do 80%. And if it's a 720, we go to 85. If it's a purchase, if it's a rate and term, that would be capped at 80. So up to 85 on a purchase, 80 if it's rate and term. We welcome cash out. And these are the cash out parameters here. Also want to note that our minimum loan amount for DSCR is 100,000. And if they are in that lower range, then there's a 5%. Actually, this should say if the loan amount is under, I'm sorry, that's a typo. It should say if the loan amount is under 125,000, then there's a 5% LTV reduction. So keep that in mind as well. And then what's the max cash out? So if they're doing cash out up to 75%, they can get 300,000. If they're at 70%, 500,000. If they're 65%, up to 750,000. A common question we get is, do you guys do delayed financing? What delayed financing is this is somebody who purchased a home outright in cash with no mortgage, and now they've closed and now they want to recoup that cash and put a mortgage on it. Yes, we do that. And there's no wait after closing. The purchase had to have been an arm's length transaction. We actually treat these as a rate and term, not as a cash out. And the value for LTV purposes is going to be based off the lower of the acquisition cost or the current appraisal. Okay. And yes, Karen, thank you. I saw that in the chat. So Karen Thompson is our national underwriting manager, and she may pop in and answer some of your questions in the chat if you're keeping an eye on the chat. So that's awesome. So now let's look at a refi example. So let's say that you have a refi and the rent comp schedule on the appraisal is $2,000 a month. The lease agreement is less at $1,400, and our PITI is $1,600. Does anybody know what the DSCR would be in that case? If you have an answer, go ahead and type it into the chat. So nice work, Peter, under 1. So yes, in this case, you've got to take the lesser of the appraisal or the lease agreement. And there's our little handy dandy calculator over here. And you're going to take 1,400, which is the lesser of the rent comp schedule and the appraisal, or the lease, whichever's lower. In this case, it's the 1,400. Divide that by our PITI, and we do have a DSCR ratio under 1. So in that case, it's going to be 0.875. We're going to look at that section on our matrix instead. And you can see that with a 660, we would go up to 75% on these, which is nice. Now, we also have a no ratio that you will see on our matrix. When would you use no ratio? No ratio would be good if you have a DSCR that's even under 0.75, or if you have a refinance with no lease, because that does happen sometimes where you can't produce a lease agreement. We do require a lease agreement on a refinance. If you don't have a lease agreement on a refi, we're going to have to go no ratio. So you can see the LTV requirements and the credit score requirements for the no ratio product are a little more restrictive. Now, which borrowers will qualify? So the borrowers that we're going to qualify here are U.S. citizens, permanent resident aliens that have a green card, non-permanent resident aliens with a valid visa and 2 years residency in the United States. By the way, if they're renewing, their renewals delayed, then we're going to need verification of that extension. We also can do the inter vivos revocable trust in certain cases, and limited partnerships, general partnerships, corporations. And yes, they can close with vesting in an LLC, which is very common because a lot of these investors that do DSCR loans are self-employed, and a lot of them want to close with vesting in an LLC. So we would need a personal We would need the personal guarantee on these loans. All members of the entity must be a natural person. The docs, all of the docs, so the 1003, everything will be in the individual's name. We will need a credit report in the individual's name. What's going to happen is that closing, the vesting will be in an LLC. We also can't have any layering of entities. For example, if we have an LLC whose members are in a trust, not allowed, can't have layering of entities. With the LLC closings, we're going to need the articles of incorporation or articles of organization. And just a side note, it's not here in the slides, but if you are closing in an LLC, our bank requires 48 hours on the wire. That's just if you're closing in an LLC. So if you're CTC on a Monday, we need to make sure that closing is Wednesday, just to allow time for the vesting in an LLC for the wire. So what type of investor experience do they need? We do have to determine if they have investor experience. So if the 1003 doesn't indicate that they have current properties that are current investment properties, then we're going to ask you about it, and we would need previous rental address verification. That is just so we can determine if they are a first-time investor or not. So a first-time investor is defined as somebody who has not owned property within the last 3 years, and we do allow these. First-time investors are eligible up to 80%, and if they are a first-time investor, we're going to want that DSCR to be over 1, meaning that we want the rental income potential to be more than the PITI for a first-time investor. Generally speaking, we do not allow first-time home buyers. That's different. So just to tell you the difference, first-time investor is somebody purchasing their first investment property. First-time home buyer means this is their first home that they're purchasing ever. So there is a distinction there. And generally speaking, we don't allow first-time home buyers unless there's a second borrower on the loan who is not a first-time home buyer. So let's say that you have borrower 1 is not a first-time home buyer, borrower 2 is a first-time home buyer. That's okay, because you at least have one person on the loan who's not a first-time home buyer. So Orion is willing to finance up to 10 properties DSCR for one individual, but we allow that individual to have up to 15 mortgage properties total. So we're willing to close 10 of them for you, but we're okay with them having up to 15 mortgage properties. When you're counting the 15, you don't have to include commercial properties or any properties that are over 4 units, which would also be commercial. What are the credit requirements? So credit requirements, we do need 3 scores. So if your borrower has 2 scores, that is not allowed. That would need an exception with our investor, and we would have to reach out and ask them. So generally speaking, we need 3 scores, and the middle score needs to be a 620 or higher. At least one borrower on the loan needs 2 trade lines, either open or closed. And you don't want to see anything major happening on the credit report in the last 4 years. So foreclosure, short sale, deed in lieu, Chapter 7, Chapter 11, Chapter 13 filed, nothing within the last 4 years. And then we allow 1 30-day late on a mortgage in the last 12 months. Can't be rolling, so it couldn't have been 30 days late. January, February, March, not allowed. We allow 1 30-day late in the last 12 months on all mortgages. So that is the reason that we have to ask you for that last 12 months of mortgage history on all properties that they own. Either we need to see it on the credit report. If it's missing from credit, we need a VOM, but that's the reason we need to see it, so we can make sure we meet that requirement. They actually can be rent-free. So if they own other properties, but they're currently living rent-free, we do allow that, but you have to be very careful with this, because we need to know 100% for sure, feel very warm and cozy that they are not purchasing this property to live in it. Because as we discussed, DSCR is for investor occupancies only. This is not to use for somebody buying a primary or a second home. So let's say they own other investment properties, but they're currently living rent-free. That would probably work, because we can see that they do already have investor properties. Late pays in the over 60 days. So let's say they have an auto payment on their credit report that went 90 days late, we would ask you for an LOX on that. And hopefully it was something that was outside of the borrower's control. But anything greater than 60 days, that basically means 90 days or more late in the last 2 years, we are going to ask you for an LOX. So let's talk about down payment and reserves. Believe it or not, you are not misreading that. Gift funds are allowed. So even though this is investor occupancies, we're allowing gift funds for both the down payment and the reserves. The borrower does need 5% of their own funds, but we're allowing gift funds for down payment and reserves. Gift of equity is not allowed. Why? Because DSCR is not for an arm's length transaction. So we cannot do somebody selling to a family member, something like that. So can't do a gift of equity. Funds from a non-borrowing spouse, meaning that let's say the down payment is coming from the wife who is not on our loan. We actually don't treat that as a gift. We just say that's borrower funds. So that's a pretty cool guideline. Business funds can be used for both reserves and down payment if they're 100% owner of the business, or if we obtain an access letter from the other owners. Bitcoin can be used for down payment and closing costs. I like this guideline. Cash out can be used as reserve. So if you're doing a DSCR cash out and that program requires 9 months reserves, then as long as they're going to have 9 months reserves from the cash out proceeds, we can use that as reserves. You can use 100% of stocks, bonds, mutual funds, invested retirement accounts for reserves and down payment. You don't have to cut the percentage. You can use 100%. Like we mentioned earlier, we need 2 months asset statements. We don't generally pick apart your asset statements at all, but if we can see that there was a huge, large deposit that is really out of the norm, for that borrower based on the asset statements that we have in the file, we would probably ask you for an LOX on that. And this part is cool. The reserve requirements that you saw in our matrix are only for our subject property. So we do not need, let's say they own 15 mortgages. We don't need reserves on those. We just need the reserves on our subject property. And interested party contributions, for example, seller concessions, that would be capped at 2%. For 80 and up LTV, we go all the way up to 85 on purchases. And then it would be capped at 5% if you're 80 and under. So let's look at the pricing and prepayment penalties. Orion is actually a price leader for DSCR. Now, we all know what's kind of happened with the market recently. Rates have definitely gotten worse, but I actually just priced this scenario right before our call, subject to change at any time, of course, but we're definitely a price leader in DSCR. If you're using LOANSIFTER and you don't have us in your LOANSIFTER, please send me an email and I'll send you instructions on how to do that. Even if we're showing in your LOANSIFTER for like FHA and conventional, you have to make sure that you have us selected for all products so that we're showing for DSCR. But again, if we're not showing you in your LOANSIFTER, please let me know and I'll send you instructions. Make sure you do the Titan DSCR. It's our only DSCR product that you're going to see in the drop down. I priced a 75%. Our pricing is also really good at 80. We go all the way up to 85. Pricing does get worse once you go above 80, obviously. So for the best pricing, I would keep the LTV 80 and below. And you can do borrower paid with us. So this can be borrower paid comp or lender paid comp. As you know, these are non-QM loans, so they're not subject to the 3% QM test. And another spoiler alert, we're planning for like mid-April. We're gonna roll it out where you as a loan officer do not have to be licensed in the state that you're originating. So let's say that you have your license in Georgia and Florida, but you want to originate a DSCR loan in Wyoming, then we would allow that. So not yet, not today, but the planned date for that is by mid-April. So I'll definitely keep you guys posted on that. That's pretty cool. So let's talk about prepayment penalty. A prepayment penalty is going to be, you don't have to select a prepayment penalty on these, either 1, 2, or 3 years. And what that means is if the borrower pays off the loan within that time period, so you're going to select 1, 2, or 3 years. If they pay it off within that time period, we would be due a prepayment penalty. The 3-year prepayment penalty has no pricing hit. So if they select that longer term, that is going to be the best pricing. Our 2-year has a 0.5 point hit. The 1 year has a 1 point hit. There are certain states listed on your screen that don't allow a prepayment penalty in their states. If that's the case, you're going to price it same pricing as a 1-year prepayment penalty, but of course there wouldn't actually be a prepayment penalty in place on the loan. How do you calculate this? Now, the easiest way to calculate it is let me send you an Excel spreadsheet that's going to calculate it for you. You're just going to punch in the numbers. So ask me for that. Send me an email if you want that. But the actual formula is you're going to take the loan amount times 0.8 times the rate divided by 2. And that's the amount of the prepayment penalty. So if you have a $300,000 loan amount, 4.5% rate, what you're going to do, and this is calculated here, take the 300,000 times 0.8, is always 0.8, times the rate converted. You got to convert it to a percentage like this, 0.045. That's for a 4.5% rate, divided by 2. And that is 5,400. A common question I get is that the same prepayment penalty for the 1, 2, and 3 year? Yes, it is. So the prepayment penalty is the same, whether they pick a 1, 2, or 3 year. The prepayment penalty is due if they pay off the loan within that period. The difference between the 1, 2, and 3 year is the pricing. So the 3 year has the best pricing. And then the 1 and 2 year are going to have those pricing hits that you see here on your screen. Okay, so let's talk about property and appraisal. What kind of property types can we do? So single family residence, PUD, townhome, all the way up to 85%, 2 to 4 units, all the way up to 75%, warrantable condos to 80%, non-warrantable condos to 75%. I'm not going to bore you guys with the guidelines on non-warrantable condos. They're in our matrix, which is available on our website. I'll also email it to you guys. There's a 5-acre max. Again, I like to mention our investor will case by case consider small exceptions. So let's say you've got 6 acres. Let me know that. We can ask the investor as long as we're close. And then the seller seasoning less than 6 months, also considered case by case. They're really not wanting to do flips on these essentially. What we cannot do as a property type would be manufactured or modular, condotels, boarding houses, commercial, which is anything over 4 units, co-ops, mixed use, farms, rural, escrow repairs. Again, I'm not going to bore you. Look at our matrix for all of the types. Now, this is a general rule of thumb. It doesn't have to be exact here, but like I mentioned, we want to make sure that these borrowers are purchasing investment properties, not owner occupied properties. So if you really want to see them purchasing a property that's 75% or less of their current residence that they're living in, whether they own it or rent it. And we're going to be looking that up on Zillow, Redfin, something similar to that. And it just needs to be close. If it's a little bit off of that, that's probably okay. But 75%, if they're purchasing a single family resident, if they're purchasing 2 to 4 units, obviously that value is going to be a little higher, and that wouldn't apply in that case. So short-term rentals, this is a very, very popular topic right now. Yes, we allow short-term rentals. This would be like Airbnb, VRBO, those kind of things. How that works is this would be for this calculation that I'm going to show you is going to be for refis only, because obviously if it's a purchase, then we're just going to go off to calculate the DSCR ratio. We're just going to go off what the appraisal is showing. But so for refis, we would need 12 months evidence of receipt of that short-term rental income. And I'm going to give you an alternative here, but here's how you calculate it. So let's say you have 12 months history of receipt. We're going to take the average of that. And this would need to be verified through a third party. So you have an option. You can either use for the DSCR ratio, the average short-term rental income over the last 12 months. If you do that, then there's going to be a 5% reduction to our max LTV. Or this is an or, we can go up to 150% of the market rent from the appraisal. And that allows you to go all the way up to the maximum LTVs that we allow. Again, this really pertains to refis that are rented out as short-term rentals. It doesn't really apply to purchases, because with purchases, we're just going to take that, we're just going to do exactly what I showed you earlier. We're going to take the rent comp schedule divided by the PITI. That's what we're using for a purchase. And I know there's probably going to be some questions on that, so we'll come back to that. We're almost through these slides, and then we're going to take your questions. So what kind of appraisal? You're going to order one full appraisal. We don't need two. Interior, exterior photos. If it's a single family residence, what we need is the 1004. That's your standard appraisal, plus the 1007, which is the schedule of rent that shows us the rent comp schedule. If it's a 2 to 4 unit, then what we need is the 1025. Ordering an appraisal. I would highly recommend that you order these in our portal. We have over 15 different AMCs that we work with. They are not all created equal. I do have my favorites, which I'm going to point out, but you don't have to sign up with our AMCs that are in our portal, because we're signed up and your relationship with us is wholesale. So no sign up required. You can choose whoever you want from the drop down when you're ordering these. Our AMCs, a lot of them will even let you set up panels. If you're wondering who my favorite is, I definitely have a favorite. There's no benefit for me telling you this. I tell people that all the time. They've never bought me a Starbucks. They've never sent me an Amazon gift card. I tell people to use a Reeves because they have great customer service. As you know, problems are arising on appraisals. It's very important that you have somebody that you can reach that can get you back on track. And these guys are fantastic at picking up the phone, answering emails, and jumping in when there is a problem. That is why I recommend them. Of course, you don't have to go with them. You can go with whoever. We do accept transferred appraisals. So we will take a transferred appraisal on a DSCR loan. The important thing is that it wasn't ordered by the borrower or the real estate agent or anything like that. But like I mentioned, we do want you to order appraisals in our portal whenever possible. This is because when the appraisal comes back, it will task to the underwriter automatically. Even if the appraisal is the only thing in on the loan, it will task back to the underwriter for review with no action required on your part. We're going to order the revisions for you. We even have an option if the borrower doesn't want to share their credit card information with you for you to place the order. You go ahead and order it for them and select the option to defer payment when you place the order, and you can send them a payment link to finalize the credit card payment on their side. So that's pretty cool. And we made it through, guys, and I'm a little bit over on time. That's my phone number on the screen. Don't forget, we also have our scenarios desk. So that's scenarios with an S at orionlending.com as well. Thank you guys so much for joining. You guys enjoy the rest of your afternoon.